In a major policy shift, the Central Bank of Nigeria last week halted the sale of foreign exchange to Bureau de change operators. The CBN governor, Mr. Godwin Emefiele, announced the decision after 2 days Monetary Policy Committee meeting in Abuja. The ban will ensure that the Apex Bank discharges its statutory function efficiently and sanitize the foreign exchange market in order to curb dubious and unwholesome practices of BDC operators. Now, this development has so far been greeted with diverse reactions from different quarters, and most importantly is the reaction of the Manufacturers Association of Nigeria, who believe that the latest policy corroborated its view in addressing the incompetent activities of operators in the BDC market. Since manufacturers in the country depend largely on Forex and the interbank market to meet their Forex needs, the association disclosed that a single FX window will eliminate the excesses of middlemen, save the value of the naira, and allow for available FX to be allocated productively using the official banking protocols. Well, to discuss this and other issues, I have joining me live via Skype from Ikeja, Lagos. He is the Director General of the Manufacturers Association of Nigeria, Mr. Segun Ajayi Kadri. Thank you very much for your time. It's good to see you, sir. DJ, can you hear me? Good afternoon. All right, I am trying to connect with. Can you hear me, sir?
Yes, I can hear you.
All right. Let's go straight to our point of discussion. Now, let's start with the general reactions. A lot of reactions to this move.
I'm not sure you are hearing me.
I can hear you now. I can hear you. So what's your reaction? Let's do in a generalized term to this move by the CBN.
Okay, thank you very much for having me on your program. Thank you. Can you hear me?
Go ahead, DG. Yes, I can hear you.
Okay, yes, I thank you very much for having me. My reaction is quite simple. You can hear me?
Yes, go ahead.
Okay, so and it is to the fact
can you please
that
drop the audio from the television set?
Out with a directive, and I think it's quite a welcome development at this time, in the sense that we are having a situation where there should be a better flow of funds to the money deposit banks. That should be I mean the foreign exchange will flow much better to the money deposit banks, and so manufacturers should be able to have access to more funds. What the experience has been is that when when Forex is given to the BDCs, it is not at a rate that manufacturers find friendly, because the spread is usually too high, and we don't also have a value for the money, in the sense that our productivity is impacted in the sense that we are not able to buy our raw materials, our spares, and our machineries at lower rates. But when we go to the money deposit banks, we are also not able to get the amount of dollars that we want. But now the central bank, with this policy, should be able to allow more Forex to flow into the money deposit banks, and they should be able to meet more of manufacturers' demand. However, we are conscious of the fact that there is need for the central bank and the money deposit bank to ensure that the process works. There should not be a situation where manufacturers, after completing Form M, after meeting all the requirements, will not be able to have the required funds. What we feel about the BDCs is that, one, they get it at rates that are much higher. Secondly, there are other users also that access it probably for expenditures that may not reflect the economy as much as the manufacturing, and also the fact that we cannot ascertain the integrity of the transactions that takes place in that segment of the market. So what I think the CBN has done is to be able to streamline it and move closer to the single window that we have always asked for. I think we should now rely on the capacity of the central bank to be able to ensure the sanctity of the process. They should be able to see that the forex that flows to the commercial banks are not finding their way to the BDCs only to come to end users at much higher rates. I think that's generally the way we are looking at it.
Well, that's a good way to start with that breakdown, DG. But the banks, many say that capacity to simplify this process and make it easy for your colleagues and your peers, the manufacturers and everyone to access this dollar is what everyone is worried about. How well do you think the CBN can evaluate and monitor this new process?
Well, I think all eyes now are on the CBN, and the CBN knows it, that of course many people will be impacted by the non-supply of funds to the BDCs. So the onus rests on the CBN to ensure that they sharpen their monitoring process. The Manufacturers Association of Nigeria has actually offered to be part of the process, especially for monitoring the inflow to the manufacturing sector. We should be able to know how much has been demanded, what has been allocated, and what the gaps are. And CBN will be able to know how much it has given to the banks. For the BDCs, I believe that if they had been able to justify the huge amounts that has been given to them, because I think it was something in excess of $12 billion in 2015, versus the less than $2 billion that was given to the money deposit banks. So I think that it is now time for us to look up to the commercial banks to see that the debts that will be established for giving forex to those who request for it, especially from the product sector, are effectively allocated. So I think the CBN, apart from MAN, should also encourage other stakeholders and involve them in the process of monitoring, because it has become a critical aspect of our business that we need to ensure flows seamlessly. So I think part of the way for CBN to strengthen the house of CBN is to bring in stakeholders that will be able to participate in the process of monitoring.
Now, some say addressing or channeling the forex through commercial banks might not be just that single problem, but addressing the supply side will do better. Will I address this challenge better than this? Are you also thinking along that line? It's a two-in-one question. Do you also agree to the fact that we let market forces control our foreign exchange market?
Yes, ultimately, I mean, the market forces will always, at the end of the day, determine what happens, and that may be the direction that we should go. But I think more importantly at this time is the supply side, is the supply constraints that we have spoken about. There is no doubt that what is necessary is for us to have more supplies. But you know, Nigeria is a mono economy, and our capacity to generate forex is severely limited, constrained. So I think that is why we must always have this prioritization of allocation. So I think even with the limited supply that we have, while we are yet to bake the bigger cake, and I'm not saying that we shouldn't do that, I mean, we should actually concentrate and focus on doing that. but we should, with the little that we have, allocate it appropriately in such a way that we can fund sectors that will be able to contribute to baking a bigger cake. And that is why we have always said that we should prioritize the productive sector so that we'll be able to have more streams of foreign exchange inflow.
All right, moving on. I want us to talk about backward integration, because many times I like to ask you this question when I have an opportunity to talk to you, because this is the only way we can also reduce our dependence on Forex. What level are we? Please update Nigerians with regards to backward integration, DG.
I think the backward integration process, especially in terms of the efforts of government, has always been what we have preached. And government has indicated readiness to prioritize backward integration. In Manufacturers Association of Nigeria, we call it resource-based industrialization, which means deliberately being able to source our raw materials locally. However, there are severe constraints in terms of achieving that objective. Backward integration will require that those areas where we have raw materials, where they can come from, needs to be adequately supported so that we can establish that value chain that is needed to achieve success. I believe that we are working with government, especially with the Raw Material Research and Development Council. We are engaging them, and we are on the verge of signing an MOU with them in such a way that they have a priority list of raw materials that we need to source, that we should be able to, in the short term, source more effectively. We are also working with government, and the CBN is funding, especially in the agri sector, for us to have a holistic approach, a kind of a roadmap to eliminating those raw materials that we normally source from outside of the country. Because at the end of the day, that is what can bring down our level of demands for foreign exchange, so that we can only now leave it to those ones that we absolutely know that we cannot source locally. So man is partnering with government. Hi. Made in Nigeria, because it has a way of improving your capacity to even source your raw materials locally. It gives us the leeway to be able to fund research into sources of developing local raw materials. It will improve the partnership we are having with the academia and with the research institutes to be able to expand the scope of raw materials that we are sourcing locally. And we encourage the CBN to also expand this initiative of supporting industries that are backward integrating, especially what they are doing with the milk industry and also in the textile. So I think we are working towards it, but we are not there yet. And this issue of scarcity of dollars, should actually be an incentive to speed up the process.
We've seen banks come out, sent us mail adverts saying that a desk has been formed or has been opened for dollar, because if in case you want to get dollars from the bank and you have necessary documents. I know it's early to start judging this new initiative or policy, but what feelers are you getting as people now begin? It's almost 1 week. Tomorrow will make it 1 week. So what feelers are we getting? Are people already getting access? Is it easy? Because it needs to be seamless, because you manufacturers have a timeline in most times when you have to meet up.
You are quite right. Right in the sense that we need a seamless process. and also the help in the process of mainstreaming demand. A platform for engaging banks such that we'll be able to know and monitor the progress of your demands. I think it is a first step that the CBN has put in place, and it will now allow for reviews, it will allow for effective monitoring, it will allow for confidence to be built that there's a debt that connects those who are demanding the Forex and the bank who has a responsibility for allocating it. So I think it's a step in the right direction. However, we continue to talk about the importance of evaluating the process, determining how it's going to be monitored to ensure that there is flow of allocation to the productive sector especially, and that there is no round tripping and there's no infraction of any sort. Because like I said, foreign exchange is yet important for productivity, and I think that should not be lost. So we are looking forward to more of government, of CBN avenues for ensuring strict compliance with the directives.
Okay, wrapping up this segment of the show, the long-term objective of all of this is to address this disparity between the interbank rate and, of course, the parallel market, and collapsing all FX windows into one single official window. With this kind of process, how soon do you see this happening? Yes, the CBN might be the right people to project, but you are players in this sector. Do you think that this would happen sooner than we expect, or is it a tall order?
Well, considering the fact that you are relying on another country's currency, we are talking about the dollar here, and it is much stronger than the naira. It's not very easy for you to predict that is going to happen very soon. However, I know that the success we make in this first round of major interjection by the central bank will determine how fast we are able to move. Of course, it is a step closer to having a single window that we all say we desire, but at the same time, it must be a steady step that we are taking. I think if we allow this to play out and we see that there's no reversal, for instance, and we see that there is steady progress, the money deposit banks are conforming, we are having more flow to the users, to the end users, then we can begin to see a possibility of achieving it in no distant time. But like we said, it's still too early to say. And I believe that there are too many forces at play here, so for us to be able to start to shout uhuru from the beginning. So I think it is safer for us to wait and see how things pan out on this matter.
All right, and we'll keep a tab on you too, to talk to you, to bring us up to speed with feelers or whatever you're hearing, so that Nigerians will understand positive or negative impact of this new policy. Thank you very much, Director General of the Manufacturers Association of Nigeria, Mr. Segun Ajayi Kadir. I appreciate your time.